Hey everyone, it's Mike from Orderflows, and welcome to this presentation on the Orderflows Delta Surge for NinjaTrader 8. And if you're not familiar with the Delta Surge is, it's a free indicator that we offer on our website. It's free. Just go to orderflows.com and you'll see you can download it for free off our website. You just got to enter your email address. And the reason why I'm shooting this video is because, over the last several weeks, there's been some changes with some of the programming, and some people were getting issues saying, the license wasn't registered even though it was a free indicator. So we went back, we looked at and solved what the problem was for certain people. Some people had no problems, some people had problems. We were finally able to isolate the issue, and we've updated the software, and again, it's on the website. You can go there, it's free. There's no charge for this indicator. Now, before I jump into it, I just want to go over a brief disclaimer. Understand that trading does involve risks. Nothing is certain in life except death and taxes. So like I said, it's a free indicator. All you have to do is go to orderflows.com/deltasurge.html, and it'll take you to a page. You scroll down to the bottom of the page, just enter your email address, and after that you click submit, and then it takes you to the download page. And it runs on NinjaTrader 8. It doesn't run on TOS, it doesn't run on Sierra Chart. It's for NinjaTrader 8. And yes, it will run on the free version of NinjaTrader 8 as well. And if you're not into order flow, if you're just using a normal bar chart, yes, it'll work on a normal bar chart, and I'm going to show you how to put it on a normal bar chart. So what the Delta Surge does is it measures increases in order flow delta. And people hear the term delta in regards to trading, and order flow delta is different than options delta. Don't confuse them, right? Order flow delta is a net difference between aggressive buyers and aggressive sellers versus delta in reference to options is different, right? Delta measures the sensitivity of an option's theoretical value to a change in the price of the underlying asset. That's completely different than order flow delta. So now you're going to ask, what's the difference between aggressive buyers and aggressive sellers? Well, you have to understand there's different types of market participants, right? You have aggressive traders and you have passive traders. Aggressive buyers are the buyers that buy at the market. They lift the offer. Aggressive sellers sell at the market. They hit the bid. Passive buyers are those who work a limit on the bid or below the bid. Passive sellers are sellers who work a limit on the offer or above the offer. So, most of us were familiar with a DOM, okay? And if you're looking at the DOM, right, you're seeing the bids and the offers above and below the current where the market's trading. Those are passive traders, people that are working offers on the upside, people that are working bids on the downside. Okay, those traders are happy to wait for the market to come to them. They're trading, but they're passive in their activity, right? Now, for a trade to occur, someone has to cross the bid-ask, right? Someone has to sell to the passive buyers, or someone has to buy from the passive sellers. Okay, someone has to be aggressive, otherwise price won't move. It'll just stay there. It'll just stay 77.5 at 77 3/4. So, and this is an order flow trader chart, right? What an order flows trader chart does, it's a volume footprint chart, and it takes all that information that you see traded here going back and forth in the DOM, and it puts it into an easy to read format. Okay, so it's going to, you can look at it on a minute-based chart, a 30-second chart, you can look at a 5-minute chart, you can look at a range-based chart, volume-based chart, many different ways to look at what you see traded on a DOM, right? If you're looking at a DOM, you got to rely on your memory. Oh my gosh, what traded here? What traded there? And it's just happening so fast on a DOM, where if you look on a footprint chart, it just, it puts it into an easy to read format, so you know what traded at what price, how much volume traded here, how much volume traded there, etc. Now, delta on most volume footprint charts appears at the bottom. Okay, each bar has a delta. Okay, if the delta is positive, it means there were more net aggressive buyers than aggressive sellers in the bar. If delta is negative, it means the opposite. It means that there were more aggressive sellers than aggressive buyers in a bar. And again, like I said, most software puts it on the bottom. Some software will put it, right below the bar or above the bar. It just depends on your software. Some people, like myself, prefer to see it on the bottom. Some people say, I can't be bothered looking down there. Fine. You can get software that will put it underneath, but I like to keep it there on the bottom. Clean up my chart a bit, because otherwise you're looking at just more numbers up there. So Delta, to me, is one of the foundations of order flow, right? The other two being imbalances and point of control. Now, what makes Delta so powerful is it's market generated information that tells you who is dominating the market right now. So what the Delta Surge is going to do, right? It's going to take all this information, right? You see, like I said, every bar has a delta, and it's looking for increasing delta, either increasing positive or increasing negative. You can see this is E-minis. We got a little surge happening right here. You see the delta going from positive 184 to 587 to 1400 as the market makes new highs. So what it's telling you is aggressive buyers, people are coming in force and buying more and more and more, right? It's causing this market to make new highs. So what the Delta Surge does is it analyzes the order flow delta, looking for increases, either positive or negative, over several bars, and signals you when aggressive buyers, meaning positive delta is expanding, have taken control, or aggressive sellers, meaning the negative delta is expanding, you know, like going from minus 100 to minus 200, minus 500, have taken control. So, you know, for example, okay, here you could see a small Delta Surge happening right before the market pops up to new highs. After we hit the highs, we see a Delta Surge sell happening right here as the market starts selling off. So, you know, it's a handy little tool, but I'm going to show you how it, you know, just like I said, you know, it will work on a normal order flow volume footprint chart, okay, which is this. But, you know, I realize not everybody uses a volume footprint chart, and then that's fine. But if you want to add order flow to it, you can download the Delta Surge, import it. You just import it as you would any other indicator, and you know, you could adjust the settings. There's not many settings. It's basically the increase right here. I just have it set in this case 10 and 10, so I'm looking for an increase of 10% over the next 3 bars. So you can see this is the E-minis. You know, this is just over the last couple of days. This is, I'm shooting this video on Saturday, April 25th. So let me just put the date up here. It's just so you can see here, date range thing. So you can see yesterday was the 24th. This is E-minis 1 minute chart. Now people say, well, you know, hey, it gave a signal up here. Okay, well, you know, the earlier signal was down here. Again, you got to realize, put trading, what's happening in the market in context. Okay, now again, this is a free indicator. We kept it kind of basic, and the point being is, you know, it's good enough by itself if you put what's happening in the market into context. Okay, people say, well, this isn't much of a move here, but you see how the S&Ps have been moving lately. You know, this is about a 5-point move here. Here's a few points. You know, here's a nice little buy. It just doesn't look like much. You know, here's some nice sells. This is the evening session. Look at this move. You know, you get short from up here and get another signal, keep you short here. You know, from, you know, whatever this is, 88 down to, you know, the 70s. You know, here's a move up, a couple moves up, some moves down. But again, this is a, you know, it's a 1 minute chart. And again, if you were to adjust the settings, you know, you'd get probably some different signals, or adjust the chart. Let's go to, I don't know, let's go down a time frame, because E-mini S&Ps are a little bit volatile recently. So maybe you want to look on a shorter time frame, say a 30-second chart. People say, well, why do I got to keep up different charts? No, you know, find the chart that you trade, put the indicator on there, said it's a free indicator. You don't like it, you can drop it. Like I said, you know, it's a little bit more volatile now. You know, with the VIX, I think closed on Friday around 39, so there's still a bit of volatility in the market. You think, well, 39 in the VIX is kind of low, especially since we've been, you know, above 40, above 50, above 60 for the last several weeks. But, you know, waiting for the VIX to get back down to, I'd like to see the VIX get down below 20. But here's 30-second chart. You see, there's a nice buy here. Here's a nice little sell. Okay, what stopped you out? This little sell stopped you out, but you got a nice move late in the day. Here's a nice little sell here. Here's some small trades here. You know, here's a buy, here's a sell. Yeah, just going back. This was the 23rd. I mean, look at this. Move down, this move up. there's a move up here. This one just sort of went sideways. Then you had that big drop, if you remember. Some more buys down here. Some sells, doesn't work out, goes sideways, and then boom, you get the nice move. But again, there's a nice move here. There's a move here. These are a bit tricky. You got a little bit of a move. Just go back again. Here's a nice buy right before it took off. Going back to earlier in the week. I mean, here's a nice buy. Here's a nice buy. People say, well, we had a losing trade here. Well, again, you're buying up near the high of the day. Do you necessarily want to be doing that? Can the market go higher? Yes, it can. Where would you rather buy? After you had a nice sell-off, then you get the surge? Yeah, that's the place that, in my mind, that you'd rather buy. Okay, so that's a 30-second chart. Let's expand it a bit. Let's go to a 5-minute chart. Okay. Again, same settings. You saw the settings earlier, 10 and 10. Right? I haven't changed them, whether I've gone down to from a 1-minute chart to 30-second chart to a 5-minute chart. Just give it a second here to pull up the data. But again, I'm showing you these on different charts because I'm not saying you have to have all three, these different charts open. It's because, I want you to see that on different charts, on the same settings, I'm looking at the same thing. Because I realize some people trade a 1-minute chart, some people trade a 5-minute chart. Okay, but I look at that right here. Yeah, you had a nice little sell here, but what's better is this nice buy right here. Okay, here was a buy here, here's a buy here. It's a 5-minute chart. Okay, look at this, a nice sell here, a nice buy here. Okay, so people say, well, I don't use a minute-based chart. I use, I don't know what you want to call it. So choose a volume-based chart. I think volume-based is better than tick-based in terms of order flow. Tick-based chart doesn't take into account volume, but let's just see how with the exact same settings. Okay, 10 and 10. Okay, not many signals, but there were some signals here late in the day on Friday. On the Thursday, here's a nice buy here. There was a nice sell here. I mean, these are just beautiful ones, from the 20s down below the figure, from the 90s back up into the teens. These, not so good. This one, it sort of went sideways on you. It goes back here. Okay, so people say, well, you know what, Mike, I don't trade equities. I trade, I don't know, crude. Crude's been everyone's focus recently. So it's crude oil. I got crude here now. Let's go here, crude. Even though with a lot of brokers, they really ramped up the margins with the volatility. But let's just take a look here. We'll start with crude oil 1-minute chart. This is June crude. Okay, you see it says calculating, so I know it's working right now. It just takes a minute for it first initially to come up. Okay, there's a little move here, there's a little move down here, so a little move up. This one just sort of went sideways. This was a small move up. Here we're just sort of going sideways. And again, any method of trading, if you're taking a signal basically in the middle of congestion, it's probably not going to be very effective. The more effective signals are going to be the ones that occur at clear swing highs or swing lows, like this one here. But anyway, let's go back here. Here's a sell here. Here's a buy that didn't work out. Here's a nice sell. Some more sells, buys. There's a nice sell there. Here's some nice buys just straight up. More buys. Just sell, some more buys. Some sells here right before the market sells off. Now, the thing you got to realize with order flow, people always think that order flow is going to give them a signal up here at the high or a signal down here at the low. No, it's looking for a certain condition happening in the order flow that's going to give you, the signal. So, some days, depending on how you have the setting, it may appear, it may not appear. Okay, here's a short. There's a buy that failed. The buy, started to go up, failed. Then here, a nice buy when you rally from 14 up to 17. Here's another buy. It wasn't that big, but it doesn't look very big, but that's about 50 cents. Then, of course, you had this nice sell from, the $16 area down, down below $15. Here, again, some nice buys and nice sells. Okay, well, people say I don't use a 1 minute chart. I mean, look at that. Look at this sell here in the evening session, $24 down into the $23. Let's say, well, I'm more of a swing trader, or I trade a longer time. If I trade a 5 minute chart, okay, let's take a look at a 5 minute chart. So again, I'm not saying you have to have all these charts open, but based on what you trade, I'm just showing you different examples. Whether it's a 1 minute chart, a volume based chart, a 30-second chart, 5 minute chart, it's the same settings. Yeah, so yeah, here not so great on the 5 minute crude chart. Yeah, there was this sell, this buy, okay. But again, it's a free indicator. So, if it doesn't work for you, it doesn't work for you, depending on the market you trade. Let's take a look at, I don't know, euro currency. Okay, there's a lot of people trade Forex. So let's take a look at the euro, the 6E. It's a 1 minute chart. Just give it a second. This is loading the tick replay. Okay, calculating here. Okay, here's a buy here. Just didn't really do much. Here was a buy here. Just kept you in the market. I mean, it's a move from 107.70 up to, where you get the sell signal up here at 107.95. And then you get another buy signal there. There's a 1 minute euro currency chart. This first buy worked beautifully. The second buy, no, stopped you out. Okay, fine. You got to learn to take your small losses, so you can be around to catch those big pops there. Here's a couple buys here. This first one, nothing. The second one, yeah, probably would have stopped you out, but you had a nice sell here. Okay, I mean, from the 108.30 area down below the 108 even area down in here, pops back up, comes back down. So this is the euro currency chart. This is the evening session here. This is whatever this is, 6:30 Chicago time. Now, people say, well, yeah, give me this lousy sell signal down here. Well, fuck's sakes, man. The market just sold off from, what was this, 109 even down to 108.30. Then you get a sell signal. That's probably not going to be a very effective sell signal, okay? Ideally, you'd like a sell signal here, but it didn't happen based on the order flow, okay? Just reading what's happening in the order flow. So again, if you're taking this trade, you're stopped out. Okay, fine, be a big boy about it. You got to take your losses. You had some small winner here, a small winner here. Not every trade is going to be a winning trade. Ideally, you want to get short at around the high, like here, right? From 108.90 area down into, imagine you probably would have held it. Hopefully, you could have held it down below the, the 70 area. Even if you're just covering it here, where you get the opposite signal. Okay, fine. Say you didn't cover it down here or in here on this move back here, and you held it a bit. By here, you should be getting out. A couple trades didn't work out, but those small trades, you take your small loss, okay, but you take your small loss so that when you get the big trade come in, you're still you can still participate. Here's a move up, here's a move didn't really do much, this move stopped you out, this one just went sideways. Again, where would you rather be buying? Somewhere near the low, or after you just rallied from the low all the way up to new highs and you get a buy signal? More effective to take buys somewhere at or around near the low of the day rather than at or around the high of the day. That's just me. I prefer to take buys near a low, swing low a day, than buys near the high of the day or a swing high. I mean, look at that, 108.65 all the way above 109. 109 even. So, let's take another look. Gold. Okay, people say, well, I don't trade any of those things. I trade gold. Okay, fine. Gold. Let's keep it on. What is this? A 1 minute chart? Fine. Let's keep it on a 1 minute chart. I don't want to confuse people with so many different time frames and stuff. Gold. This is Friday. Look at this move right before the big sell-off. Here. Got some little buys late in the day. Fine. Again, do you necessarily want to be taking this high after you just rallied $10 in the gold? Some people will. Okay, fine, but you got to manage your risk. Got to manage your trade. Let's take a look here. Again, similar thing. Do you want to necessarily be taking buys up at the high of the day or sells at the low of the day? At least here, it's come after you hit the low, you bounce back up. And here's one just sort of grinded higher, ground higher. Sounds like coffee. Here's a nice sell. Here's a buy. Again, it's up near the highs. It did pop up a little bit. This sell didn't do anything, but again, we were already moving down. Here's a nice sell here. Here's a sell, just went sideways. One got a little bit of a move. Again here. But again, you wouldn't be taking these longs up here because you should already be long from, almost $5, $6, $7, $8 lower down in here. So you're not going to be worrying about getting long up here because you should already be long from, down in here. Here's a nice one. Boom. Comes back. Where does it come back to? It comes back to the original area where the surge was occurring. Then it continued on its move back up. Here there's a nice buy to a sell, moving back up to another buy. So again, it's a free indicator. You just go to our website. Where is it here? Orderflows.com/delta surge.html takes you to a page. You got to scroll down to the bottom of the page. You have to enter your email address, hit submit. Okay, if it doesn't work on your browser, people use different forms. Some people use a Mac, some people use PC, some people use an Android phone, some people use an iPhone. I've tested it on several different formats. It'll work. Sometimes people say, I can't enter my email address. You just type in your email address, hit send. Okay, give it a try. Again, it's free. Okay, I'm not charging you anything for this, but it's the whole point is to get people understanding on how they can add order flow to their trading. And for example, right, if you have a method of trading not involving order flow, and you add a tool like the Delta Surge to it, it can help give you more confirmation to stay in a trade or get out of a trade or or pass a trade. I know some people use order flow to help refine their entries and exits on their current method of trading. So order flow is a very flexible tool, but again, remember, it's a tool for traders to help them in their trading. Okay, it's not a system, it's not a method per se. So take a look at order flow, and I think you're going to find it really helps your trading. So thanks everyone, have a great day.